The next session is about to start, and it's our annual VC Pulse, where we get a read on what's going on in the venture market in terms of deals, funds, returns, all those real juicy terms, right? So I'd like to welcome to the stage Dixon from DCM. Thank you, Dixon. Yeah, in the middle. Okay. Fannin from Northern Light Venture Capital, here from Beijing. Thank you. Okay. Okay. Chuck Comey from Morrison and Foerster. Thank you, Chuck. Next to Dixon. Stuart Schonberger from CDH, one of the higher performing China funds, and one of the more hard to
as well as the man on the right.
hard to get to if you're a journalist, but maybe as an event person it's easier. But anyhow, we're really glad to have. And then last but not least, Stella from Keytone Ventures. Stella here from Beijing.
How are you? See.
Why don't you go down next to Stuart, because this area here is a little hidden for this side of the audience. If you want to move in a little bit more so you can see, it might be a good idea. Okay. So we will have about 10 minutes of Q&A at the end of this, so please warm up your questions now. And let me introduce each one of them. Chuck Comey is a corporate finance partner at Morrison & Foerster's Palo Alto office and has 16 years experience working in China and Japan. Before relocating to Silicon Valley in 2010, he was managing partner of the Shanghai office for 7 years. He is co-chair of the China Private Equity Group. Next, Dixon is a co-founder and general partner at DCM and has led investments in numerous successful deals. For more than 35 years, Dixon has influenced and guided entrepreneurs, investors, and executives in the computer and communications industries. He served as chairman of the National Venture Capital Association from 2008 to 2009, and I know that he helped to spearhead a number of very important initiatives that have been adopted by the community, by the industry, due to his leadership. Fannin is a co-founder of Northern Light Venture Capital, based in Beijing. His investment areas include TMT, clean tech. I know we have a number of people here in the audience who are interested in clean tech. So if you have any clean tech questions, you know who to ask. He's also interested in healthcare and consumer sectors. Prior to founding Northern Light Venture Capital in Beijing, he was a technologist, a lead technologist, VP of corporate strategy at Juniper Networks, and a co-founder of NetScreen Technologies, which Juniper acquired for zillions of billions of millions of dollars. And last but not, finally, hold on, two more. Stella is a founding partner of Beijing-based Keytone Ventures, which was formed in 2008. It was formed originally as a split-off from Kleiner Perkins, China, which makes it an interesting fund to follow. Stella has vast experience in the venture capital arena and in technology investing. She was at IDG Excel beforehand, and everybody I think here knows IDG Excel's track record in China. So that speaks a lot to Stella's experience, and I love to have Stella as a panelist because she's very outspoken. She's not really afraid to say what's on her mind. So thank you, Stella, for being here. Stuart Schonberger is a managing director at CDH Investments in Beijing and head of the firm's investor relations. He's a founding partner at CDH Management Company as well, and I'd love to hear a little bit more about CDH because it's one of the more quiet funds, but one of the more impactful funds in China. Would you agree with that, Stuart, or not?
Yes, we do keep a low profile. You've broken that profile.
Oh, yeah, we managed to break that. Okay. So, we've been talking a lot about China venture, doom and gloom, whether, we've hit the bottom of the bottom, and, is there going to be a rebound, and when is this rebound going to happen? And is there going to be another Baidu or Alibaba or Tencent out there? So I'd love to start off and ask each one of the panelists for their view on where we are now in this cycle, and is this the bottom of the bottom, or the start of the bottom? Okay, why don't we go down each panelist? You could address that question. Your view on where we are now in China venture.
Well, I don't know the answer, but I don't think I really care about the answer.
He doesn't really care about it.
Yeah, I think as a venture capitalist, what I want to do is to be the better, hopefully, than my peers. Just like sometimes you have different vintage year for wine, right? You have to put the wine whether it's a good vintage year or bad vintage year. We have to do this. This is our career. So really, what we need to know, what we need to do, is to be better than average or most of our peers. Put this way. But I'd say that we have had a lot of hiccups or challenges now, and going forward, there's still a lot of opportunities. I look at the long horizon. China has a lot of investment opportunities for us. For example, the macro trend, urbanization, and consumerism, and low carbon economy, and also the economy restructuring, driven by the market and also by the government. Right? All these things are long-term trend. They're still happening now, and the Chinese are very entrepreneurial. So, and also we see talk about some of the innovations happening, right? And then we see more and more innovations. Since I came back to China in 2005, I see a lot more innovations. Entrepreneurs are more mature. They lack of managerial capability before, but today it's much better. We still have this issue, but it's a lot better. And the ethical issues are getting better as well. So you see these are the good things happening. But also there are a lot of challenges, right? Of course, the GDP is slowing down, but other than that, we also see some uncertainties, big uncertainties happening, including some of the political issues, social stability issues. So these are the challenges. But my view is, if you really look for the long horizon, 10 years, 20 years, I think China is still one of the best places to invest as a VC in the world.
That's a pretty strong statement. Okay. Anyone care to challenge that or double that? Dixon?
No, I actually.
You have a real,
Yeah, well, I have. And generally, I'm in agreement with what you just concluded, but I'd like to give it a little bit of a different perspective. I've been through, as hard as it may seem to believe, 3 cycles in the U.S. venture capital industry, and then that's starting back right after the disk drive bubble popped in '83. We started the first fund that I was ever involved with at Accel in the '84, '85 timeframe. So we had one cycle that went up until '91, '92, and then we had another cycle that started that came along in '91 and kind of crested with the well-known bubble of '99 and 2000, and then we started another cycle, which you can have a debate about whether we are peaking out in another cycle right now, but we've been at it for the typical length 11, 12 years or what on, and clearly there are some elements of a bubble, I think, in certain sectors like in social networking, but it's nowhere as crazy or out of control as it was back in the '99, 2000 timeframe across all sectors, and companies getting silly valuations with no revenue and things like that. So that, coming back to put China in context here. DCM started going to China in '99, and we planted a bunch of seeds then, and that was a really good time to be doing that. And we've had a lot of successes. See a lot of people here in the room that I've had the pleasure of working with and partnering with, and it's been, a really good time. Then there was a hiccup, I think, in the global financial crisis in '08, '09, and somebody just yesterday was reminding me of one of the things that's really different in China versus the U.S. is that the government in China, when it decides that it really needs to do something to stimulate the economy, can move very, very quickly and decisively, and they pumped huge amounts of capital into the macro economy in a very quick and short time frame, and got things turned around very, very quickly. And so, and just like has happened in the U.S., we've gone through a cycle, and I think most people would say that valuations kind of pretty much across the spectrum were a little bit silly and out of control and peaking in the Chinese VC market back, a year and a half ago. And the closing of the public window, I'd like to make a couple comments on that, has caused rationality to return to the market. I think the IPO, the window for Chinese companies going public in the U.S., I think there's only been one IPO of a Chinese company in tech in the last 15, 16 months, and that happened to be one of our companies. And I just wanted to make an observation on that. And for the world to have a successful IPO, I don't care where it is, you need to get people to be willing to attend roadshow meetings, right? So in the last period during this downturn, the bankers have not been able to even get institutional investors to go attend. They can't get anybody to come to a meeting. We got a great meeting here. We got a lot of attendees. You can't get anybody to buy stock if they won't come to the roadshow. So I think we're, I agree with you. It doesn't matter whether we're right at the bottom. I think we're coming to the end of, one of these cycles, and, the valuation correction has helped bring rationality back into the marketplace. There's some very attractive real companies in China right now, and I think that was the point that several of those points were made by the panelists on earlier. So I'd like to come back after, we get done with everybody else here and just talk a little bit more about some of the things that we need to do to make changes for the positive in the Chinese industry. But I'll defer now to the other panels here.
Okay. Chuck, are you seeing a slowdown? How is the slowdown impacting the legal business that you're involved with? Are you busier than now, or?
Zero slowdown. We're getting killed right now. I think you have to de-link the macro trends from immediate trends in the venture industry, which really invests off of a different timeline and hypothesis. And I think it's still the case that, as was noted, one-party capitalism has the ability to exert certain controls and provide certain incentives to key sectors of the economy, whether it's life sciences, clean tech, those kinds of things. We've seen it earliest perhaps in semi. And so, it was interesting. I was just down at the Intel Capital Global Summit in Southern California this morning on another panel. Yeah, and the consensus there on valuations were that yes, there's some rationality that's come back, but they were, people I was talking to say, well, there's the good companies can still command what the founders want to talk about, at least as their opening position. I think there are some areas of concern. There's some concern around, which we can talk about more, about VIE and the consequences there. There's been some court decisions and structures that investors like, and calling those into question. There's been a closing of the door on national treatment for local funds, for the most part, for foreign investor purposes. But all that said, I mean, is there going to be another Tencent? Absolutely. There's no doubt. I mean, there's going to be multiple companies, and there's going to be more of them who are coming to this market, to the U.S., and they're looking to tap synergies here, and they're looking to bring their technology here because they've had the kinds of success and innovation that were alluded to earlier. So I think it's just, our capital markets, to your point, we have to put our own house in order. But I think China, lots of promise still.
What's happening with New Oriental? It's been under some sort of SEC investigation over the structure.
Yeah, I mean, New Oriental is like maybe not every, but a large majority of Chinese companies that are listed in the United States got a letter from the enforcement division of the SEC saying, tell me about this interested party transaction, how is it documented, tell me about your VIE structure, and what are the relevant rights. And so I think, we can segue into this now, but in my view, the VIE issue should be distinguished from the accounting issues.
Absolutely.
The reality is the VIE structure is a structure which the Chinese government has been entirely happy to allow to exist because it fosters the kind of domestic activity that they want to see. And they are happy to permit that to continue without explicitly endorsing it. Now what happened is through these reverse merger companies, they hired these, small accounting firms. They didn't do audits. You had long top, muddy waters. The SEC starts down and they start knocking at the door of the CSRC. And when you push government officials anywhere, much less, China, they're going to react in ways that you may not want. And so it was an entirely, in my view, stupid approach to resolving the issue. Were there companies that shouldn't have gone public? Absolutely. But the way that was handled and mixing in, now the Jack Ma and the Alipay thing didn't really help matters. But again, fundamentally, there have been and there will be significant numbers of very strong Chinese companies that should continue to list. And they are going to be able to get these roadshow meetings because they're great businesses. Yep. New Oriental just got a look and it's being scrutinized. That's all. That's my view.
Wow, Chuck, I'm glad I'm on the panel with you. Makes life easy. And also, Dixon, I guess you're a legend in the Valley, so it's I think your perspective on the cycles is very relevant. I think people forget that China is new to this game. So CDH was set up, 10 years ago, and as a team, we've been working together for 15 years, and we're the oldest group in China. So that means the whole industry is only 10, 15 years old.
There was no venture capital to speak of in China in '99.
Exactly.
And we did our first deal by remote control, all the people flying back and forth across the Pacific.
Right.
In fact, the entrepreneurs over there that we backed, the first one was 51 Job, and they had to come here and present at a Berkeley Women's Entrepreneurs Forum, and that's where we met the team that we backed.
Yeah, no,
Just to prove your point.
and that, so, I think what's strange about this question is you're in a room, well, there's some public investors here, but most of the investors in this room should be either venture capitalists or private equity investors, which is defined as a long-term asset class, and we're looking at the world through short-term vision, which is oxymoronic. It's I think the heydays of is China an emerging market versus an emerged market? I think that is I think people have to start to realize that this is a real market, and a real market that has its cycles. And as good investors and good long-term investors, the down cycle washes away some of the floss and the dross that builds up during the heydays, and then you get back to a normal cycle. I think also what I see on the investor side is trying to juggle the different numbers. You see how much money came in. In fact, Dixon, in '99, there was less than $1 billion under management in the whole VC market in China, and today there's dry powder. Take your number, there aren't great numbers, but somewhere between $70 and $80 billion. So most people are looking at the trajectory from $1 billion to $80 billion and saying, boy, this is a huge bubble, and this is too much money chasing too few deals, there's just too much money is flooded in too quickly. But they forget that 80% of the financing in China is still bank loans. And that's the 20% is equity. 20%, that 20% that's equity is still only the domestic market makes up most of that. So that means private equity and venture is less than 5% of the whole financing. And then if you do it on a percentage of GDP, it's less than 1%. Which is in any other market would be a very small amount. So, I think Deng Feng said it the best. So our job is to be the best of each vintage year. Each vintage year will have its own challenges. Certain vintage years will do better than others, but I think you've got four venture firms here that are all top-tier firms, and if we don't outperform the average players, then we haven't done our job. But that the market is there and the opportunity is there. So I don't know what else you can add.
Right. I wanted to agree first with most of the investors and Chuck about even though the market isn't doing well, it really doesn't affect us as venture investors because, we expect our investments that will last between, say, 3 to 7 years or, 4 to 8 years for that to exit. So luckily, we've been in business as Keytone Ventures has been in business for 4.5 years, and we've had out of the about 20 investments, we've had 2 exits and 1 going to come. So we're expecting maybe about 2 or 3 next year, maybe 2 IPOs potentially next year. So we think even given the market conditions in the U.S., I think the companies that we have may have a chance to go IPO next year. One is a fabless semiconductor company, but I would like to differ a little bit from what mostly Silicon Valley return the VCs. Actually, China Venture Capital started in 1993 with IDG as the very first one that actually got support from the 3 governments in Beijing, Shanghai, and the Guangdong governments. But they were, Pat McGovern from IDG, that I was associated with them for 9 years. Before.
I completely agree. I didn't mean to leave you out. And I've known Pat for a long time, but I think he's a very special case.
And I'm fortunate enough, I have gone through like 2 downturns. Unlike Dixon, I have a lot to learn from. So we kind of know, and the bad market is actually good for investors because the valuations are coming down. Like for last year, it was, like Feng said, it was a high vintage year. We only made 3 investments, and 2 of them was from the previous year. And 2 out of the 3 investments were really high valuation because that was the market. So we were trying to have a discipline and invest fewer cases. And this year, especially toward end of this year and maybe rolling over to next year, is probably better timing for VCs to invest because valuations are coming down. And I wanted to answer Rebecca's question regarding whether they're the Baidus. And actually, most of the investors have already said that, yes, absolutely, there will be many companies that will be billion-dollar plus companies in the next 3 to 5 years or 3 to 6 years that I think are going to be, either public in the U.S. or in China. And there are a few that are areas that I thought maybe I should share with you that I think there will be some great companies which may or may not be our investments, but if you look at opportunities here, one is for e-commerce. If you look at 360, which may not bring good returns for investors for a while, but I mean, that's also a tremendous company that, if you look at Amazon, it wasn't profitable for 7, 8 years, right? And the company is not profitable, but it's huge. It's taking up a huge market potential. And if you, that's e-commerce area. And if you look at mobile gaming, I certainly believe there will be at least $1 or $2 billion plus companies in the next 3 to 5 years that will go IPO, and that's going to continue to grow. And travel industry, it's a $1 trillion plus industry, and there's already Ctrip and others, and there will be more. And if you have Qunar and those other companies, you definitely it's going to be very promising companies, and they will go IPO. And also, if you look at cloud computing, maybe it's still more at the earlier stage, but there are bound to be companies that will go IPO. So those are the 4 sectors that I just mentioned to share with everyone.
Anyone on the panel differ with those 4, or would like to add or subtract?
I just make so Stella, you were there with my original partners, Wang Shu and Gong Chen. One thing that I learned from them, I think, is that the difference between the Baidus and the Tencents and the Sina, Sohu, NetEase, that age, and Deng Feng, you can give your view on this, but as a venture capitalist, the world has changed. The chances of finding a charismatic leader that just has a great idea, that you can sort of wing it and put it together, and then it becomes $1 billion company. I think those days are gone. I don't. You were there. I wasn't. What we're seeing on our side is, as a venture capitalist, you have to be much more specialized, much more. The VC isn't just bringing money and being the adult in the room anymore. Is a much more value-added partner in terms of helping these companies grow, and our teams have to be much more specialized in order to win the best deals, because the entrepreneurs themselves are more sophisticated in what they're looking for as a partner. So that has changed dramatically, but that there will be amazing companies like Stella pointed out, I agree with.
Absolutely. So the low-hanging fruits are gone.
Right.
Venture capitalists have changed, or has been changing, from the generalist to more a specialist approach in China, and focused and build their domain expertise, only do some certain sectors and certain stages. Actually, you talk about whether there's some other sectors, right? Because I think Stella mentioned about a lot of the so-called TMT stuff, IT and internet. I think other sectors are promising, including some of the, we call it advanced manufacturing, but that includes mainly clean tech and new material stuff. We have a totally different perspective in clean tech investment in China versus in the States, because China has maybe one of the best, manufacturing infrastructure in China, in the world. And actually helped for those kind of technology. If you don't have the volume production, it's not a complete technology. The technology development, including the process tuning, so all these kind of stuff, China has advantage. So that's why, and also the low cost, low capital expenditure. These things helped VCs. It's in U.S. People can argue whether this is a VC type of business. In China, yes, the growth rate may still be slow as compared to IT, but the capital spending is much lower. So they still give you a pretty good returns. Some of our investment in these new materials, those kind of things, we actually see very promising. And it addresses not only the China market, it's the home market, but also it can go global. In fact, some of our companies that actually have started selling product to the international market. These are the things we think very promising. The healthcare, you mentioned about that, is also a very promising sector. The healthcare reform just started to happen in China. That drives the whole big macro trend in terms of the, whether it's the medical devices and the hospital management or the pharmaceutical opportunity in China. And we actually I was pretty, I wouldn't say pessimistic, but I definitely didn't even look at the pharmaceutical sector when I just came back to China a few years back. But the last couple of years, when I looked in details about the model in China versus model in US, actually it was very different, the development of the new drugs. We actually feel that there are opportunities to invest for VCs in China in this pharmaceutical sector.
China's going to be the #2 pharma market after the U.S. by 2015, surpassing Japan, and it's just a question of how fast they scale from there.
What about doing R&D in China, though, in these areas, in pharma and clean tech? Is there an advantage for Silicon Valley companies or U.S. companies to have their main R&D in China?
Absolutely, yes. That's a no-brainer. DCM has one portfolio company, Pharmaron, which is doing precisely that, and they've gotten a huge amount of support from some of the big pharma companies in the U.S. as well as in Europe. So that's kind of a no-brainer.
Is that because of the cost and also because of some competitive advantage besides cost?
I don't know, why don't you?
Well,
Certainly
again,
cost is a big thing.
cost is
Big part
huge.
of it.
They've provided on a national level multiple locations for research facilities, land grants, returnee, personal incentives for attorneys to go back. So there's a massive shift of talent going on where people are going home, and they're going back to their native land, and they're going to drive that platform there to be the world leader in pharma development. And I think it's just a matter of time. Foreign big pharma does not have currently an alternative to that development base. I mean, they're all heavily invested there because they realize what's going on.
It's in other areas too, besides pharma, right? Clean tech?
Clean tech is a natural. I think Dongfeng's exactly right, because you have the state, again, is dictating these energy policies, and they're able to drive infrastructure and development projects that in other economies, you get into hearings and budget allocation discussions, and it never happened, but there it does. And so I think there are going to be, and we're seeing it already, where U.S. companies that they have great technology, but they're not in the right market. And so there may be, for example, a process developer that can enhance the efficiency of polysilicon manufacturing, but he needs to prove it in China in a test plant because, to your point, the costs are lower. There's a lot of companies like that they need to partner. So I think there's a natural synergy, actually.
I just want to confirm that what I learned is that for pharmaceuticals and biotechnologies, there are a lot of talents that went back. They get supports from the government with the facilities, and the key is they also have the trial runs in China. So they will probably be very competitive and then serving the domestic market. But for clean tech, what we've learned is that there are more better technologies in the US. So we're looking at clean tech companies in the US that will serve worldwide market. Including China, and especially China. Not only the technologies, and also, of course, the lower cost and the government support of the facilities, which could save a lot of money for these companies.
And the healthcare services is interesting. We're, at CDH, we're more domestically focused, less cross-border focused. What you see in healthcare, and the characterization of China is typically an overcapacity market. One of the few places where it's under capacity is healthcare services. I don't think you can find a Chinese, Dongfeng, I'm not Chinese, and Stella, I'm not Chinese, but there are many Chinese who are going to looking for hospitals in China and getting the hospital services that they want in China. So there's just a tremendous underserving in that. And in fact, Chuck, you might know about this. I guess the regulations are starting to loosen up where foreign investors in healthcare services this upcoming year in 2013, it may become an area where foreign investors can become more active. Up until now, it's been basically not closed, but very difficult for foreign investment. But the need is so great that it makes sense for it to open up for foreign investment.
I just would confirm your point by saying that DCM has made 2 or 3 investments in the whole healthcare services area and webs, using the web for scheduling and information dissemination, all that. It's a huge opportunity, no question about it.
Yeah, so leading into the next question, I think the China venture and startup scene started with a number of copycat models of business models that worked well in the U.S. But now we're starting to see these micro innovations coming from China, and we're starting to see some of these Chinese companies going global. Do you think that we're just at the beginning of this going global phenomenon from China, or is it just going to kind of plateau where it is? What's the long-term potential for Chinese companies going global?
Actually, it's still at the beginning of going global, but somebody, I think you may ask a question in the previous session about whether China and Silicon Valley, that's a research report that in 4 years, whether China can, outperform Silicon Valley.
Innovate.
Yeah, in innovation. I myself, I don't think that's the case. I'm not as optimistic as some of the people in China. The main issue is the Chinese education system.
That's right.
Yeah, that was a fundamental issue why it will take many, many years for China really to catch up with Silicon Valley.
The next generation?
Yeah, maybe a few generations.
A few generations?
Well, also, I think, one thing that we haven't pointed out is that from CDH's point, we actually, the market is big enough in China, but also the opportunities in China is that it really is a very idiosyncratic market, and it is a very inefficient market, which is great for private investors. It's difficult for public investors, but it's great for private investors. And all of those criteria make it very difficult for a company that's super successful inside China probably doesn't have a business model that is relevant for the whole world. And then even if it does have a business model that's relevant for the whole world, the entrepreneur that drove that to be a multi-billion-dollar company is probably very, very local. And his chances of being able to be a global manager is very difficult. And the people skills is the real missing piece here. What we're looking for is to invest in local entrepreneurs who really know how to operate in China. The beauty of that individual is they can build a great company in China. The deficit of that is the chances that they can build a worldwide company at this stage in development is quite difficult.
So we're not going to see another Robin Lee or Jack Ma?
I mean, never is a long time. We're just talking about the bulk of the market, and there are outliers all the time. Would be my, Dixon, you probably.
I would never say that, no, I think you will see a Robin Lee and Jack Ma, but neither of those companies have
worldwide
started to venture significantly outside of China. I think there's very much more complicated picture than that. There's one thing that's really unique about China is the M&A difference between China and the U.S. The Chinese, by their nature, believe that they can, that they don't need to spend a lot of money buying another company and paying a fat M&A premium. Yes, I'll hire a bunch of people and do all the stuff that you do when you want to get competitive without making a M&A. And so that's a mindset change. I think the other thing that you have to, to have, if you're going to really become a significant player on the world stage, it's highly likely that you need to be public somewhere in an international capital market. So that means they can't just go public, inside China, which comes back to the discussion we were having at the beginning of the meeting about needing to to have a big stake in the ground in one of the U.S. exchanges. Chris, Shannon, and Vance Info, have gone through that experience, and I think you learned a lot and found out that you got to, you can't be spread all over everywhere. You got to go focus somewhere and really concentrate on a market where you can, really deliver value add. So I think it's going to be a while. I think, I'd be surprised if that wasn't the consensus of the panel here for.
Just one illustration.
It isn't because they don't have the money. That's final comment.
Several years ago, we were representing one of the flagship enterprises in China, national company, and they were looking at the GE white goods business. And there were some macro factors that came into play as well. But after their look, the chairman's comment was, how do we manage this? Chinese way, U.S. way? I'm not sure. And he had other priorities domestically that he wanted to pursue. So closed outbound China M&A deals we did last year that I did, one. And it was in natural resources, not tech. So, but I do think it's coming. We got one now in life sciences.
And natural resources is important. It doesn't take management to take rocks out of the ground.
Well said.
Sorry.
No, you're right. You're right.
Maybe some
I-
engineering skills.
Yeah, I was going to add to that. I think for the internet or mobile internet companies, China is such a large market. I mean, they're so busy trying to grow their own business there. So in the beginning, really, they cannot afford. I think until like the Alibabas, which really have a plan, right, with Yahoo, and we don't know if it's working, but they think about it. But if they can grow 30% or 50% every year, why would they want to come to the U.S., right? I mean, until probably they're growing at 10 or 20%, then they're thinking about expanding globally. And these are for the large public companies mostly. I mean, definitely it's not for the small companies. I mean, they're surviving, right? And those are the companies that we invest in, so we don't think there's a trend. However, I was with Heist this last couple of years, and you see, Robin Lee was here. They were talking about, in the future, and you see the companies and the public companies. They're coming to Silicon Valley,
Yeah, they have
and
global
there's going to be they're going to acquire companies just like the Japanese did, right? Just like the yeah. So that's going to happen in the next 5 to 10 years. It's going to be more and more activities, and they just have to learn how to manage that. There has been some things that happened, like the TCLs and the Huawei 3Com. There's all these things that happened that were, there were failures, and there were, I think the Huawei 3Com was kind of like a success, and they needed each other, right? And there's one trend going here. And talking about innovation there, I have seen, like Feng said, right? I have also seen more innovations. I'm sure, Dixon, they have seen more innovative companies in very small ways. I mean, you've seen the Focus Media, which is, it's a business model innovation, right? And actually, companies were trying to learn it in the U.S. But they're also the small. We're looking at the mobile apps companies, and there are innovations here that in some of the companies that's no longer. I mean, it's not anywhere in the world. So we look at these companies. However, we really can't invest because the barrier of the innovation is too low. I mean, people can easily learn. I mean, one of the companies we almost wanted to invest, and Weibo, Weixin learned about it, and they can spread to 100 million people. So it's very difficult for us to look at those small innovative companies in the mobile internet areas and be able to invest and make huge, great companies.
I just had one more comment I wanted to make about the subject here. You take an example, you mentioned Huawei. They've been trying to become a global M&A acquirer, and they get stymied, particularly in North America. I actually visited their customer center a few years back in Shenzhen, and they had all the installations around the world in there, and the only place on the globe that was empty was North America. And part of that is a direct result of the challenges, historic challenges one of my buddies, Eric Benamou, tried to sell 3Com to them and was unsuccessful. He spent about a year of his life and finally gave up because of the U.S. government. And so I think one of the things that's going to have to happen before a company like Huawei can become a successful a global acquirer is that they're going to have to act like a real live public company and submit themselves or subject themselves to Western-style governance policies, and they have not been willing to do that so far. And so, fair enough, but unless and until that changes, it's going to be very hard for them to crack this nut. That's just another comment and perspective on it.
Just to add to that, if you look at Lenovo, they acquired the ThinkPad division of IBM,
Yep.
right? I mean, they have a hard time learning. The story is that Mr. Liu is the chairman of the company. They came to whatever the headquarters in there, and people were eating sandwiches and walking in and out. That's very normal in the U.S. He didn't know. He was not very pleased. I mean, those are the kind of things. It's a cultural difference. There are a lot of things they have to learn. But if you look at Yang Yuanqing, he's a younger, and he lived in the U.S. and he has learned a lot. But there's still a lot of things that if you wanted to grow, it's going to take some time. And it's going to be taking a lot of the, having great local people who can manage international companies.
Okay, last question before I open it up to audience Q&A. So what are each of you doing with the portfolio companies that are kind of stuck there, that they can't go IPO now, maybe they can't raise another round? What's happening with these companies?
Who's going first?
Anything?
After you.
I'll just, are you going to go?
Go for it.
I'll
No,
just
you got
say-
a lot more
No,
experience.
I think, well, it's, I don't have any more experience. It's the same thing that you
Anywhere else
do
in the
when you
world.
have U.S. companies that face that same problem during a down cycle. You force them to get cash flow positive and get their act in order and survive the the bottom and then hopefully begin to grow and generate cash and maybe change the strategies, maybe make some changes as we come out of the bottom, but it's kind of a no-brainer. We remember the famous paper that Sequoia sent around to all of its entrepreneurs in the middle of the 08 and 09 crisis. Those are classic examples. There's no rocket science here at all. And sometimes, by the way, in China, you find it harder to persuade entrepreneurs to do what is in their own self-interest than it is here in the U.S., just because of the experience differential.
Well, actually, it depends on why the company reached plateau, whether the market size is, they already have enough market share, but the market is small, or they just, because of management issues inside, they couldn't get enough market share. Also depends on whether the company reached the profitable state or not. If they're profitable already, and if the market is big, they only have a small percentage, then we'll try to do something, maybe change the management team, some of them, not necessarily the whole team, or do some, try to develop some new technologies. They can do more things. If the company is losing money, and we'll have different strategy. Maybe sell the company, try to sell the company to others, or if we don't want to invest, and sometimes entrepreneurs lose the passion, then we'll try to basically close them. So it really depends on the situation.
Yeah.
Isn't it really tough for those kind of companies that are in that position to raise another round of finance, because the last round was at a very high valuation? So Stella, I see you. Would you care to comment?
Yeah, I think some of these companies that got invested in 2010 and 2011, they will have down rounds, and just go with it, or sell your company at a discount that people are willing to buy. But if your company is profitable, usually the IPO windows is often narrow, as we know, right? So a lot of the Chinese companies went IPO when it wasn't really ready. That's why there's always the 200 million, 300 million, under $500 million companies still up, floating there. So for those kind of profitable companies, it's actually good for you to wait for another year or two to go IPO, and you have the potential to become a $1 billion company. So it's really not too bad. I think the bad part we don't No, if I have LPs here, it's just that the LPs would have to wait longer.
The LPs are what?
Have to wait longer for
Have to wait
the
longer.
access to get the
Well,
return,
I think
right?
Valerie alluded to the liquidity problem, right? Okay, well, in the interest of time, I just had to take one or two quick questions, no comments, just questions from the audience. Yes, Whaley? Actually, I have the audience mic, so.
Thank you. You mentioned that not too many high-tech Chinese companies have gone global, except Huawei. At least they're doing well outside of the U.S. At the same time, not too many high-tech U.S. companies have done well in China. Amazon isn't doing well, Google isn't doing well.
That's the reason for the existence of a vibrant market for venture capital in China.
Hear your opinion, what are the main reasons?
Go ahead, someone else.
I think you're talking.
Very smart people in China.
Well, I think you're talking, if you talk about internet company, right, a lot of the internet companies really about the user experience. So that is actually a very local business, I think, right? So then it's Chinese company, a lot of times you see them beat US counterpart in China, right? But if you talk about the high tech, like communication, comm equipment company, Cisco and all these, they still are, probably market share #1 in China. Maybe today next to Huawei already, right? But I think those are the global companies. So it really depends on when you talk about high tech, what kind of high tech, right? Internet, yeah, it's a lot of them are consumer related. It's more local business, I think.
Any other question? Yes, James?
I'm Jim Caldwell, ECU Regenesis and U.S. Schonberger Energy Council and Clean Tech. And one of the issues for clean tech companies going to China is IP, of course, and understanding the legal system. And I observed this year that Chen Long-Chung situation, the central government can't enforce the law. And the other one that fits my understanding of Chinese culture, Apple went to court over the iPad name, and the court told them, resell it between yourselves. So is that, it's an issue that U.S. companies simply have to come to understand the difference in the approach towards law to be successful in doing business.
So the Apple case was mishandled, and I don't think it's wholly attributable to the local law. The way they processed the settlement was not done in a proper way. So that's the first thing. It is important to keep an eye on your technology and what happens to it when you cross borders. And it is still the case in China that there are a set of regulations that date from 2003 which govern the import and export of technology. The short story on that is they're fairly paternalistic, favor the licensee, provide for things like the party that develops the improvements owns the improvements. So by operational law, if it's the local party that does that, as would be the case with an out license, they'll own the improvements. And so you need a smart lawyer to figure out how to frame that and address that in your contract. So those are the issues, some of the issues that you have to anticipate. I would just say that, take Intel. I mean, it's not their leading edge technology. They've got significant operations in both Dalian and Chengdu, and they got comfortable. So if a global enterprise like that can, I think other companies, including in clean tech, can as well.
I was at the same conference. Their CEO made that point precisely, that they would not put the factories to generate their top-of-the-line products in China. They, it's the, one step down from that, right?
That's right. And it's, in that case, it's their core is know-how manufacturing. It's not actually patent protected. So, you do need to be careful, but I think what alternatives do a U.S. clean tech company have? It ain't going to happen here. There's no way. They're not going to scale it. So the one place that is going to scale it is China to validate that.
I think the IP issue, it's there, and they just need to be educated within your company. First of all, you have to hire a general manager in China that really you can trust, and then build a team that they keep teaching their people. I think that's important. That keep your IP here. You don't have to send it over there in the beginning. But after a while, we have portfolio companies that had all their IP in Silicon Valley, and slowly over the past 5-6 years, they release some of that. They keep educating their people in Beijing, and it's still well kept. Yeah, don't have that in just one person. It's different things, different pieces in different in different people's hands, and then you still have the whole IP for protection. And then for you have to have a local GM. There's no way a foreign company wants to do clean tech in China and not having a very, very strong local GM that either can do the government relations or can do sales or both. Or you probably have a few bodies there that manage your operations in China.
Okay, Dixon, one final point before we wrap up this session. We're running a little bit behind, so.
Okay, I'll be very brief, but
Okay.
I just wanted to close with a suggestion for any of you that are involved in company creation in China and that have aspirations of building a billion-dollar company. I think that one of the things that needs to really be hammered home here is that there's this big problem with with the several hundred companies that have gone public here, and that kind of maybe some of them or many of them are orphaned. But right from the very beginning, I would strongly recommend that you do whatever is possible to instigate and install a Western-style governance procedure with a board of directors that would meet international standards of excellence and quality and so on. And that worked beautifully for us in the very first company that we invested in over there, 51 Job. Went through its ups and downs, but we put Don Lucas on the board, and with my partner David Chow, who really emphasized this very importantly, and then some very highly respected professionals from inside China. And I think that will go a long way toward dealing with some of these concerns that people have been referring to earlier in the accounting fraud and the VIE area and all that kind of stuff. So that would be my closing remark.
Okay, good closing remark. Let's give our VC panelists a round of applause, and our expert lawyer as well.
What is an innovation?
I feel very confident.
Found out that anyone that had a really interesting idea.
Usable for everybody.
So finding the fit is very important.
Doing things the right way.
Your new partnerships, new licensing, new investments in place.
Innovation Dialogue. East meets West in Silicon Valley.